Hi, I'm Brett Warren, Director of Metropole Properties in Brisbane. Well, what would the flooding mean for the Brisbane property market? The floods were supposed to be a once in a 100-year event, and here we are just a decade out from the last round of flooding. In the past few weeks and the coming months, it is important to support those in need and also provide a level of compassion. But for property buyers and investors, one can't help being concerned what another flood event will mean for our property markets moving forward. It adds another element of uncertainty in a rapidly changing landscape. But by understanding several key factors, you can gain back a greater level of control and still move forward with confidence. I believe the market will react and respond differently and more positively this time around. I want to help you understand why. First of all, it's important to understand the macro effect and the economic environment we're in today. In 2011, we're coming back off the GFC, and the economy is really starting to get moving again before we took a massive hit. It was different for us this time around in 2022. Our economy is in a much stronger position. Would you believe back then interest rates were also north of 7.5%, the standard variable rate, and that's down to 2 or 3% today. So that's a huge factor moving forward. On top of that, we're also creating substantially more jobs now, heaps more jobs around our capital city, particularly with our airports, our hospitals, our CBDs rapidly expanding. There's a number of infrastructure projects that are creating level 1 and level 2 jobs, and people are moving to take those up. So the second point there is obviously migration. We're at record levels of migration, more than we've ever seen when you compare to what's happening around the country. So those two things are extremely important in a high demand, very, very low supply market, and supply and demand is also a key factor at the moment with record levels of demand. And if anything, those flood affected properties now will be ruled out of the equation. So higher elevated areas and flood free properties are going to become even more in demand moving forward. So our markets will recover. History also suggests they will as well. There's been two great bits of information I've read recently. First of all, from QUT Professor Chris Eves with regards to what happened in 2011, and it was a short-term effect. What he found was that after the first quarter, these flood-affected properties did start to lose some money, but they started to rise in value over the last few quarters of the year, and by the end of the year, just after 12 months, the market had fully recovered and rebounded. Michael Matusik also had some interesting thoughts when comparing flooded properties to flood-free properties, and actually comparing the middle ground as well, and what it found that naturally flood-free properties perform very, very strongly, but it probably took 4 or 5 years for flood-affected suburbs to recover, but then they actually went past the median. So over the short, medium and longer term, there's definitely no effects of the property market, and I don't see any effects in the short term either, given the current economic environment and level of demand. So how do you take advantage of that? Well, the simplest way is move forward with certainty, buy in areas and locations that are flood-free, particularly flood-free suburbs. They recover quicker. If you have to buy in flooded suburbs, then there's still some really good locations, but just make sure you use that flood report on the Brisbane City Council website. It's a really, really good tool to help you understand where the flooding is going to be and how you can avoid those particular locations to greatly increase your chances of successfully investing and buying a property moving forward. That's my thoughts for today. Thanks for watching.